Good morning, CGS investors. Apologize for not getting the video out Monday night. We're having a little bit of server technical issues, and for some reason it keeps going down. So just dealing with that. But overall, let's look at the big picture, and then we'll zoom in. Not a whole lot has changed on the markets other than we've had a pullback over the past week or so. Now, this is our long-term weekly trend line. Our trend chart, obviously, we have bullish phase, bearish phase, and we are back into a bullish phase. And the market right now is trying to figure out if this is a pause, a pullback before going higher, or if it is going to stall out and potentially start a deeper multi-week or multi-month pullback, or maybe even an overall market top. So we'll have to see how that unfolds. Obviously, if we look at our CGS strategy down below, we go in waves where in a bullish phase, we have nice extended trends. We've got trends and re-entries. We're able to take advantage of the upside. 2022 was a very difficult year for most traders. We were able to etch out a small gain, still about 5% and change. And now we're back into this bullish phase and we're getting some of these nice extended moves, watching our accounts keep pushing up to new all-time highs every couple of weeks, it seems. So that's kind of where we are in the nutshell. If we were to zoom in on the shorter term chart, let's take a look at the daily chart. SP 500 did have a pretty good crack to the downside. If we look at our sentiment chart over here, we have a lot of fear, a lot of money really worried and rotating away from the stock markets, expecting it to drop, sell off. We did have a double wave of this over here. And of course, we have a double wave right here. And when there's a lot of fear, if that underlying trend, which is up, continues, we could have a very big leg higher, meaning we could still have a very strong push higher and catch a lot of people off guard. These people all thought the market was going the other way, and they couldn't have been more wrong. And that's what people are getting positioned for right now, is for a big market pullback. Yet the markets are still holding up in the short term here. The SP 500 still has a long trend. If we look at the QQQ, it's had a few different resets, had a long trend, a reset, a new trend, and right now it is resetting as well. NASDAQ is underperforming the SP 500. We are seeing the big techs stall out. Some of them have very bearish chart patterns, like Apple. So we definitely have the market, the tech space, definitely struggling a little bit more. But again, if we go back, we can just look at the price action. Obviously, rally, pause, rally, pause, rally. This is kind of a running correction, meaning it's really choppy. It's correcting as it goes up. But we do have this big sideways pattern here. This could be seen as a potential launch pattern. The market could give us another trigger if the market firms up, and we could be long the NASDAQ in due time here. SP 500, very similar, a series of rallies. We had kind of a running correction where instead of taking a nice sideways pause and taking a breather before running higher, it's just all over the place. It's just shaking people out all the time as it's moving up. So it's called our running correction. And now we're in this kind of consolidation phase, a potential period for it to pop and move higher. If it starts to break down through these levels, then we could see a much bigger pullback in the market. If we go take a look over at our hot list, not that we're looking at sectors here, but I actually just want to look down at the hot list of our indexes. We got the Russell, the Dow, the SP 500, and the QQQ. And if you notice, the short-term trend is still up on the SP 500. All the other indexes actually have short-term downtrends. They are risk off, so money is definitely rotating away from aggressive stocks, growth stocks. So we're on the last legs here of the SP 500 being very close to giving us a sell signal, a trend exit for us to lock in the rest of our gains and move away from the equities markets. Now, if we take a look at the short-term price action, we can look at this 30-minute regular trading hour chart. And I like this because this just helps us be mentally prepared for what to expect. We've had the market come up and make these highs. We've had these series of pullbacks. And what I like to look at is our little panic FOMO indicator. So typically when everybody's piling in, we generally see the market fizzle and pull back for a few days. When we have a wave of panic selling, we tend to see the market put in a bottom and bounce for a few days. Last week, we saw another pop and a big gap right up into resistance with FOMO, meaning everybody thought the market was taking off without them. They had to get in, and then they lost their shirts when the market fell. We had panic selling. We had the lime green, means the markets move too fast in a short period of time. They're oversold. Bargain hunters typically come in. We had panic selling. And so now we've had this nice pop and we've got this little pennant formation here. The market is trying to break out of it. It gapped above it and it got pulled back down as of this morning into this pennant. So we'll see how this plays out. If this does stabilize, we should see the markets right back up to these highs, and potentially in a session or two, we could be easily trading at new all-time highs for the SP 500. If this breaks down and rolls over, we could see a pretty good correction and a trend exit, which I don't care which way it goes. A trend exit will reset the markets and give us a new opportunity. In a perfect world, I would like to see the markets take off and start to go higher. As the SP 500 pushes a little bit higher, we will hit our target on the SPY, lock in some of our gains, reduce our exposure. We'll probably also at that point have the NASDAQ generate a buy signal, and we can get in with the other half of our portfolio for potentially another big push. So we'll see how that unfolds going forward. If we look at the rest of the markets, we have bonds. Bonds are up this morning, but again, they're just flagging sideways out of favor. Everybody's kind of lingering and waiting for the Fed to do something about dropping rates. We can all see it coming, but of course, and that's why people kind of got into it. But people are impatient, and now they're moving out of the play. These things take a long time to unfold. So, if we take a look at, let's take a look at the dollar and precious metals real quick. We do have the dollar. It's pulling back a little bit the last few sessions, but overall it's been building this sideways base. And I do think eventually we'll see it go higher when the stock market puts in a top. But we're definitely seeing money rotate into precious metals and miners. We've seen gold hit our 100% measured move, and now it's just kind of in feeding frenzy mode. It's in rally mode. So who knows where that top will be, but it's now overdue and ready for some type of little pause or pullback. Silver yesterday hit our Fibonacci target based on this short-term rally pullback. And of course, now it's just kind of pushing up of everybody moving in. And it feels like it's a little bit of a crowded play for a little bit. But overall, it is in a strong uptrend. I would say it's a little overheated, a little overbought. I'd like to see a pause or pullback. And then it can continue higher in a more sustainable way. We do have gold miners and silver miners having a big pop today. They definitely have lots of momentum. We got some pretty good volume. They keep going up by leaps and bounds. Big pop, pause, pop, pause. And today is another pop day. So we're seeing money definitely getting excited into the precious metals space. And this is the same with silver miners. Silver miners are up 3.4%, pushing up here. And again, silver miners are getting right up into these highs over here. So it is at a very strong run. It's hit its 100% measured move, and now it's into resistance. So a pause or pullback could be would be a good thing. We'd like to see a little pause here because then it'll build up a launch pad to bust through resistance and continue even higher. In terms of the energy space, crude oil continues to kind of hold its ground and move higher. We do have a lot of talks about, obviously, we have wars going on. They're talking about some bigger wars brewing. And of course, that is generally bullish for oil and gold. So gold and oil tend to rally during those phases, and also the stage we're in, which is, I think, getting closer to a recession in the market. We tend to see those really start to unfold and move higher. Now, I want to just quickly touch on this blue cycle here is the stock market. It will top out before the economy. The economy requires like 2 negative GDP numbers or whatever people believe is the signal. So no matter what, usually it's like the stock market can top out 6 months before the economy does, before things actually turn south. And typically near the stock market top, we have precious metals come to life and miners. We have energy and energy stocks come to life. And we tend to see industrial capital goods do really well simply because the general public and businesses are completely blind and have no idea about business cycles, the economic cycles, stock market cycles, all of that stuff. So they end up doing the wrong thing, expanding, buying new equipment after they've had a good string of years of good business. They expand, expecting that growth to continue, but actually they're literally expanding just at a market top, and they're going to end up with tons of debt, huge interest, spending all their capital on capital goods, which is machines, equipment, things like that. And if we go and take a look at the markets, let's go take a look at, obviously we just covered gold and oil. But let's take a look at the industrials. capital goods. This is people buying. Look at the rally we have seen in this. Companies, they're still strong. There's still strong sales. Companies are upgrading, expanding their businesses, thinking they're going to just keep on growing at these crazy expensive rates that everybody's charging for everything. And it does have a launch pad here. It's got a bull flag. It's got potential for another big push to the upside, but we are seeing sales do very well in machines and factories and all that stuff, all the equipment, and investors are piling in, chasing these stocks higher, which is perfectly fine. The people who are going to suffer are the businesses who just bought new assembly lines and machines and paid millions for them. And then their sales literally get cut in half or more over the next year or two, and they wish they just had their old assembly line that was paid for and would be able to keep up with their new lower demand. So that all these things are coming together very slowly. This is a process. This is not a trading event in a trade. We need to let things mature, run out of steam. People need to get hurt and lose money, and businesses to struggle for the stock markets and everything else to start to slow and roll over and have that financial reset that we've been expecting for a while. I mean, we're playing the long side. We're long this market, as even though I'm always bearish, it seems, we are long, making money as the market goes up. So we trade the charts, not what I think is going to happen. And that is the key. Opinions don't matter. Price action does. We want to just follow the trends, make money. It doesn't care how bearish I get. We will be long if the trend is up. And if the trend is down, we will be taking advantage of it, either with an inverse or a different asset that's going up while chaos is hitting the stock market. Anyways, that is it for now. Talk to you soon. Take care. Bye-bye.